The broadcast is now starting. All attendees are in listen-only mode.
And welcome, everyone. Please let me know you can hear my voice and see my screen. Welcome, everybody. Great to see you here tonight. Excellent. All right, so I see a lot of people out there from various places around the world. Let me know where you're coming from. Type in the country where you are. It's the best part about our job here is seeing all these people from around the world having success. Nothing like it. All right, we got Tampa, Philippines, Mexico, USA, Sweden, Texas, USA, more Tampa, UK, South Africa. Aye, mate. England, lovely. Hey, it's a little late out there. We're going to make this worth your while, I guarantee you that. Kenya, excellent. We have a lot of students in Africa, many that are doing very well. Mexico, North Carolina, Albania, beautiful. North South Africa, Nepal, wow. Zimbabwe, beautiful. Jamaica, Hungary. Hungary, yeah, you've got some nice prop firms in Hungary. Toronto, excellent. Well, welcome everybody to our open house pre-market for the Beat the Market Maker group here. We're a small group. We trade first, we teach second. So sorry if things aren't quite as slick as many other people portray them, Ed. But let's get started. I want to talk first basically about what happens in the U.S. dollar and why the U.S. dollar is such an important pair to watch. Before I get too far into that, I also want to remind you that in terms of our schedule, Steve is on tomorrow night. Carr is on Thursday. So this schedule you see in front of you is actually going to be how we lay it out. So this is a normal week for us. We're basically going to treat it the same way that we do normally. However, because of the amount of new folks here, it might change a bit. Now, one other question I want to ask everybody is, how many people are completely unfamiliar with Steve Mauro's teaching method? How many people have really never been exposed to this material? Type in a 1 if you can. Just type in a 1. I want to see how many people are absolutely unaware. We know that the material is all around the internet now, so most people are highly aware of it. Anybody who's seen it before and you've got an idea about it, type in a 2, please. Yeah. Great, Gert. Thanks for that. 2s. Yeah, a lot of 2s, so a lot of, okay, good. This just allows me to attenuate who I'm dealing with, and I had that feeling. Okay, so brand newbies, very few. Okay, good idea. Excellent, Joseph. Thank you, sir. I'm not seeing the chat. I'm on the wrong screen. Omar, there should be a chat button underneath go to meetings, but you probably won't see the chat. Unfortunately, it's a one-way chat. So when you type it in, it comes to me. But I will gladly share visually any chats that are relevant. Okay, great. So we have a lot of people who are familiar with the method. So I want to just talk a second first off, about a lot of what you're hearing on the internet about the dollar going away and about how the dollar is doomed and about, all that kind of crazy stuff. Well, we want to teach you not only the market making method in terms of the charts and what happens behind the screen for the liquidity providers. We also want to show you how the news is used a lot of times with that. So I'm sure you're all familiar with the BRICS currency. We've seen a lot of talk about that. I'm not sure if you guys have actually seen it. So this is a rough draft, obviously. It's not the currency, but this is the first draft of it. I'm not sure if anybody's actually seen this. I picked it up off a website in Greece, of all places. So that's your BRICS currency, and I know there's a lot of huff about this, and I think a lot of people are expecting it to one day just take over the U.S. dollar and all that. So the problem with that is this chart right here. Okay, so here is a per capita chart basically showing how widespread the economies are in the Western world. And I have absolutely nothing against the BRICS nations. I love the people in all countries. I'm not trying to be Americano gringo here, but I'm just saying that in terms of the trade and average daily flow of currency, these guys have a lot of catching up to do. I mean, China per capita is low. Yes, they have a high GDP, but there are billions of people in China, and the distribution of wealth just isn't the same as in the Western nations. So that's one thing to think about when you are considering this idea of the BRICS taking things over. It's really not at all going to happen quickly, okay? So the second thing I want to mention is that one of the prime drivers for an underlying currency actually is how much debt is denominated in that currency. So we know that there's billions, if not trillions, of dollars in debt in US dollars. I could tell you right now, factually, with this BRICS currency we see in front of us, there's no debt in that currency yet. So think about that. If you have to pay your taxes, if you have to pay a bank loan, What do you pay with? You pay with the underlying currency that debt is denominated in. So the one thing about King Dollar is that there's more debt in the US dollar than there is any currency on the planet. In some cases, all of them together combined. So another reason we're looking at the US dollar, and I'm going to pull from the Bank of International Settlements website, right? This is the triennial survey that's released every 3 years, and it shows you daily amount of movement of the various underlying currencies. And let me make this big for you. Again, I'm going to go into some projecting tonight about the US dollar for our traders doing our normal pre-market thing. But I wanted to bring you guys up to date with the dynamics of how the US dollar is the driver, and just to allow you into this idea of the fact that if the market is rigged and if there is an active manipulation happening in the US dollar, how obvious it is that that's going to affect every other currency. Okay? So if I'm someone who's manipulating a market and I'm looking at the biggest market in the world to manipulate, that's going to be where my focus is, not on the crosses, not on the smaller liquidity pairs. But let's just talk about this 1 second. So US dollar, by far the largest currency on the planet, 6.6 trillion a day traded in the various iterations of the FX market, right? Spot, outright forward, everything. Euro is behind it. Look at that. It's less than half the size of the US dollar in terms of average daily dollars traded. Okay. So 1.2 trillion. And then the Japanese yen is number 3. Okay. So if I'm a market maker and my interest is in making as much money as I possibly can, which you can probably relate to, and I have a manipulation in one of these top 3 pairs, I think it's probably a good safe bet to think that that's going to be the pair that I'm focused on, and that I'm probably going to avoid some of these other pairs that I might have manipulations in. Why? Because I want to get the most money out of the market. All right. So that, again, this is from the Bank of International Settlements. This isn't my opinion. Overall, the Forex market, 7.5 trillion a day. Okay. So what we're saying here essentially is that the US dollar is not going anywhere very quickly. And during the time that YouTube was exploding with the dollar going away, look at this ramp that's happened in the US dollar. Just saying. Okay. So that's, by the time I'm done with you tomorrow night, I'm going tonight for the pre-market and then tomorrow night. By the time I'm done with you, you're going to have a knowledge of the basic manipulation idea. Then you're going to be able to have a simplified knowledge of it. All right. So that's what I'm going to try to do between now and tomorrow night. So we meet tomorrow at 7 p.m. I'll go into it in more depth. Again, this is a pre-market, so we talk about the market as it is mostly. But I wanted to just get that idea in your head because we all are here because of Steve Mauro and the decision he made to share what his market maker coach basically drew for him 20 years ago on a napkin and pushed it across the table. And Steve was like, what is this thing? And he, fortunately for all of us, went home and looked on his computer and said, I can see this pattern all around the markets. Look at that thing. It's amazing. He was floored 20 years ago. It's probably more by this point. I've been with him since 2010, watching his initial webinars in 2010, joining in 2011. And anyway, the story behind this napkin is that his market maker wanted to work with Steve, but anybody who's about to work with a teacher, show me what you got. Why would I want to work with you? What do you have? Where are you coming from? What's going on? So this was that man's similar drawing. I had Steve draw this for me in 2012, or was it maybe a little later, 2013. But I want to take you to GJ last night in the markets. So that's pound yen last night. Here's the date, September 11th, 2023. Looks a little familiar, no? Let's get that thing over here so we can just play with it. Again, this is the type of thing that is so intriguing from our side. Now that we're teaching it 10 years, we have a baseline of, I guess we could say uptake is a medical term for do people take the material and make something with it, right? So we've been around the block with that. And it's very interesting that something so simple like this is so amazingly deceptive for the average person. And the reason for that is that trading involves wins and losses. Okay, so even a 70% win rate, which is what you're looking at right here, has a win, a loss, a loss, a win, a win, a win, a loss. What's deceptively simple about finding the correct direction of the market ends up being a complex equation when it comes to the emotions of the traders. And this is why it's so much fun on the teaching side to work with people this way because it involves so much more than just patterns and charts. It involves your lifestyle, it involves how you think, and it involves your subconscious mind. In many cases, it involves health. I want to go into a little bit tomorrow with somebody who got a heavy metals test and showed that he's got arsenic. And how are you going to look at charts if you have arsenic in your brain? So there's a lot of stuff that goes into this that makes it deceptively simple, right? So what happens? You see a couple wins and then you have a loss, you start questioning it. Say, maybe this stuff doesn't work. And you get another loss and immediately you're there system hopping, you're off to the next trading style. So very few people have the discipline to stay with a simple signature trade and follow that through during wins and losses. Again, how do you know that you're going to win overall unless you've done some type of research? So that's really the big deal. You need to find a workable trade strategy that then can be validated objectively so you have a probability ratio that you're looking at. So in this case, it's a 70% win rate, but there's a whole lot of red on there for 70% wins. And if you're like me, when you first started, every single loss was just a doom thing. I mean, it was like the whole world collapsed down. Like, oh my God, I'm not a trader. I can't do this. So really what we're talking about is 90% psychology and really 10% chart business. So just a big thank you to Steve and Heidi for deciding to make this stuff available to all of us. And again, this was GJ last night. So there you go. So we're in, I think, the right place. You're going to, as we work through this, you'll see UJ put a very similar setup like that in. So we're going to now, I'm going to change into less of a introductory type of gear. I'm going to drive down into what we do each night, what I do personally in the pre-markets. And what I'm doing is I'm basically bringing everyone into my process of how I look at pairs and how I extract certain pairs that I want to watch as time unfolds. And I know this chart looks exceedingly complex and your first time looking at it, it's like, Jim, what are you trying to do, right? What are we launching the space shuttle here or something? I mean, it's a little overkill. And then what I instruct students to do is I instruct them to basically start to tear the thing down into a simplified version of it, right? So I like D1 trends. It's one of my favorite higher time frame confluences. I find that when I'm on the right side of a D1 trend and I spot manipulation, I'm usually in a good place to profit from that trade. Now, what we need to really clarify in terms of this idea of manipulating a market, right? That's 7.5 trillion a day. You're not going to manipulate the entire market all the time. You're going to manipulate it in certain spaces, in certain times. You're going to manipulate it in a way that also allows the natural market to play out. So what we really have is you have a combination of natural forces in the market and you have these moments where the market makers step in and oftentimes throw the false move. And the false move against the D1 trend is especially juicy when you see those. We also have obviously AFP conditions, which is away from peak. That's a little more esoteric. We go into that in more of the core material. That would take me 10 minutes to explain. Then you have the sub count, which is really the use of a type of inducement where somebody comes at you 3 times, and on that third time is usually where you bite. And I know in dog training they have this, where you train a dog, you give him one treat, and he thinks it's one thing. You give him a second treat, and he values it more. When you give him 3 treats, he really values it. And it doesn't matter if you've taken the same biscuit and you've actually cracked it up into 3 separate things. That's what we're talking about with the subcounts. So these are the core conditions that I look for to find manipulation. And so that'll, I think, make it a little simpler for you to follow along with this rather complex daily trade organizer is what we call it, DTO, daily trade organizer. So we're going to start with US dollar. And the first thing that I do when I look for the day in the US dollar is I like to look at bond yields. I just like to find where things are essentially just without any type of preconceived idea. I know that the US dollar is at a 5.5% interest rate, and I can see here that 3-month treasury paper is paying 5.5%. So what does that tell me? That tells me there's an underlying demand for people that want to have a 5.5% return per year in US dollar. And so many times that will lead to a stronger dollar condition. Same thing goes with the 10-year. I like to look at that as well. And the 10-year we can see has been pretty much in an upward curve also. So from the fundamental standpoint, it looks like the US dollar wants to go higher. And this condition has been here this whole time. Okay, so we've seen that in terms of overseas capital. Remember what happens in a currency transaction of value. If I live in a country outside the US and I want to get treasury paper that returns 5.5%, I have to get US dollars before I buy that paper, right? So that's what we talk about in terms of the yields giving an underlying value to a currency. So that's where we are with regard to the US dollar. It does look like there is a long-term push in the US dollar upward. So with that being said, we're going to step it down a little bit, and then we're going to show you in terms of what all these lines are. I want to make sure that you're really clear as to what this stuff is, because I know it confuses a lot of people when you see it at first. You're like, my God, there's a line everywhere. Of course it's going to hit. Well, these are high volume areas. And really what a high volume area is, it's an area where the largest of the large traders are able to actually get filled for the massive size that they're trading. There's a lot of names for it. I know we've seen that obviously in so many of the derivations of Steve's material that are out there. But really what we're talking about with these high volume areas are transactional areas where someone is able to create for themselves a window of either buying or selling that they know there's going to be liquidity for. Okay, so if a very large trader were to make transactions in between these, they drive the price the wrong direction, right? So they'd start to affect price. They want to be able to make transactions without overly affecting prices. So really what this is, this gets down into what I've got here for D1 chart principles. And just because there's a lot of you that have been familiar with Steve's material, I just want to make this super clear before we dive too much further. What I'm simply doing is I'm going back and I'm anchoring peaks, away from peaks, zone flips, to the D1 chart especially, and I'm bringing those forward because I'm watching day after day, week after week, month after month, reversals at these areas that are very crisp because they're high liquidity areas where the dealing actually is very good for the larger traders, which have the ability to move the market. So we have to say that market makers move the market, yes, but there's also underlying sovereign funds, which are nation states, that also when they put transactions on and they take them off, they move the market as well. So this is obviously, if you want to join us, these are all the videos. The good thing about us being around for 10 years now is that we have all this stuff basically ready for you. And I've gone through and picked out what I think are the best examples of these higher time frame trap lines. So that's what those are for. And they're super helpful. We'll see a lot of examples tonight of things moving at these areas. And again, tomorrow night, we'll dig a little deeper into it. So what I'm looking at in terms of the US dollars, I'm seeing many weeks of rise. I'm seeing about 2 weeks of rise. I'm seeing some trapping activity up here at this 104.95 area, which was a previous peak formation. So that's a nice area as well. But it was this AFP is where it anchored. Okay, so you had a peak formation back to the left, and then you also had it away from peak back to the left, and that's where price anchored. So price anchored at this 104.93 area, and we can see the decided close down. Now this gets into a whole lot of stuff I'd love to share, because with the hundreds of people that are here, it'd be great to teach you all this, but really it would take me time to teach how this longer term manipulation works. But essentially we're looking at a manipulation that if we see some type of movement to the upside with a strong move, we want to look to go short. And so really what we're doing is we're saying we'd like to see this happen. Okay, so in US dollar, what we're looking at tonight is an away from peak condition, and we're looking for this type of behavior to happen. So some type of break higher, the faster the better, the higher it goes the better, and then some type of clear trapping activity. You can see we have our high volume nodes, which is spectacular to have on the spot market, right? We know the futures market shows volume, but the futures market is minuscule next to the spot market. So we've incorporated that as well. So again, high volume nodes at high volume areas oftentimes brings a reversal. So we'd love to see something in this area that looks like this drawing, simply stated. Okay, so what we have here, again, I'll try to make it extremely clear. AFP short because it's red. We have a 5200 that's headed to the downside, and this entire run, what we call an inducement phase. An inducement phase is like the car salesman trying to sell you a car. Right, take him 10 or 15 minutes maybe to talk you into getting the car, but that 10 or 15 minutes is him saying, come on, you want to buy this car, you want to buy this car, you want to buy this car. So that's what the inducement phase is. And so that inducement phase went to at least 3 times ADR, as well as it has H1 TDI extremes on it. Okay, it also happened at a D1 high volume area, and we had the large close. Now, looking the other direction, we can see that there is an outside structure, and we can see there's a gap above. So these gaps oftentimes are filled. So we could see price eventually getting back up into that gap fill. We also see our sub count on the bottom edge here. You can see how there's 1, 2, 3 to the bottom edge. And look at the way it turned right at that zone flip. It's pretty much right on it. Again, if you went to the lower time frames, you'd see that that was the anchor setup. And so things end up becoming really simple after a while. And the complex part becomes your own psychology. right? So again, we see a lot of high volume on the first leg. The second leg is a probe, dealer probe, pull back, and then we took it back long into the range. Very typical for New York session to do that, but you can see how they turned at that high volume area. So that's really my focus with this group, is finding these high volume areas that support the overall pattern. Okay, so I'm not sure how many people are into support and resistance. I don't like to term it support and resistance. I like to term it high volume areas, and in some cases trap areas, because these are areas where there's a lot of liquidity available to the dealer. And if they can get as many people sucked in the wrong direction, they have an imbalanced market, which is what they're looking to create. We'll talk about that a lot more tomorrow night. Okay, so US dollar, AFP to the short side. What I'm going to do is I'm going to save a screenshot of this, which is this little button right here. And I do that to keep a record of my own projections. And so I hope if you are doing anything in the trading markets, one thing that you really want to start to do is you want to take record of your perceptions and how you see something, right? Because that never lies, right? The worst thing that can happen is everything starts to get blurry and you're not really keeping track of how you saw something. How are you going to gain your footing if you never have a sense of where the horizon is? Where's north? Where's south? So what I like to personally do is I like to keep records of this. And I keep records in such a way that makes it really easy to then translate to our students at a later time. Okay, so there we go. So I've saved 3, unfortunately, so let me just grab the latest one. So there we go. So I like to save screenshots a lot. So what I do is I save screenshots, and then I also save these templates. I post them in the forum, and our students can load this template right here, and all of these trap areas show up for them. Okay, so there's US dollar. Let's head on over to Euro dollar. Euro dollar looks a little more simple at this point. Euro dollar does have what we call a peak formation on the bottom edge. Again, you can see how it dealt with a high volume area that was also an AFP at 106.92. You come to the daily chart and you can see where that was. It was an away from peak. Now, this is what's so interesting, is that average support and resistance traders usually will pick the tips. Very rarely, like, who would pick the second candle in the move? But we know, at least inside our group, what this manipulation is really about and what the dealers are going to try to do here. So that's the advantage we have, is that it's not really support and resistance as much as it is this idea of liquidity areas where the dealers like to basically pick people up the wrong direction and pull the market against them. That I know you understand, most of you having exposure to Steve's material. But again, by tomorrow night, by the end of my session tomorrow night, you should have a really good handle on the most simple, basic way that all markets are rigged, in which case you could reverse any type of trading system you wanted to. Anyhow, so let's get to that when we get to it. Right now, we're going to continue with the pre-market. Just looking at this, I see the completed market maker cycle. I see what, again, looks like an AFP to the long side. I know the dealers will, if they want to capture more volume, they'll bring the market down quickly, create one of those patterns down at the bottom edge, and then flip it back the other way very quickly as well. So again, we're looking for this type of thing on the bottom edge for euro dollar. Okay, so we're looking for what we call a London pattern on the bottom edge here for euro dollar tonight. So we have a one-way direction that we're trading with euro, and that would be away from peak condition. Our 5200 is headed long. You can see we did have as well in the inducement phase, right? The car salesman trying to sell you on the short side action. You can see that we went beyond 3 times ADR. We had extremes of TDI. That all builds up as confluences to give us a sense that level 3 is played out. Then we get the quick close a certain distance up that gives us our away from peak conditions. We do have an outside structure opposing this. So that outside structure might give us some type of pullback before it does go long, but that would actually be very beneficial. Would love to see this type of pattern show up tonight in EU. Okay, very simple idea, nothing really complex about that. It's a one-way street tonight. Let's go have a look again at the daily chart. Okay, so not a whole lot to really get, except we had that nice reversal. Now notice all the high volume nodes that fired off here at the very beginning on that. And you can see that what you have is you have a trap area at a high volume area. So traders are trapped beneath that area, and the dealer is now pulled back against him. Now he does his B game. He does his, what do you say? If the fish is on the hook, there's a game that a fisherman does. You let the fish run out a little bit and then pull it back in, right? So that gives us a sense of where euro is tonight. So we're going to do the same thing. I'm going to save that chart. Give me 1 second to find it. There it is. 1 second. There it is. Okay. So H1 charts are vital. I think if you ever trade this method just on the lower time frames, you're going to get really messed up. So one of the things that we try to show everybody in our group is that the higher time frames basically are way more powerful than the lower time frames. And I want people to understand that, because I get it. When something is super simple like this, you look at it, you're like, oh my God, I'm just going to trade this thing tonight. Well, you want to be very careful. You want to be solicitous about that. And the screenshot that I use for that, which is my favorite, just to get everybody on the same page, just remember this. Higher time frame is sumo guy. Lower time frames, anything from 15 minute, 5 minute, 1 minute, that's junior. Okay, junior coming up against sumo, you got to be careful about that. So really, you want to synchronize yourself with the higher time frames. First and foremost, that becomes your baseline. And then you bring in the manipulation patterns that play out on the lower time frames. Savvy? Pretty simple idea, right? This one gets by a lot of people because people get super excited by the pattern and they end up taking all of them, and we can show you that they don't all work out. But just in terms of a little attaboy to Steve and the fact that this, I mean, again, since you guys have been here, or since you guys have been exposed to Steve's material, you know about these patterns. So let me just, I don't know if everybody knows this much about them. So I'm going to go back into our database that we keep. Part of what I do every week is I create a database entry for every single one of these trades that looks really good. And I use it to train myself to be in these trades. So in terms of London patterns, that would be this one that you're looking at right here. Since 2017, how many do we have? 3,185. What? Wait, what? How many of them are in line with away from peak condition? 370, and so on. D1 trend condition, we have 708. So again, this is it's an excellent study, and again, we can go through which pairs have been performing, right? So 330 of them in euro dollar. This is the type of thing that most traders don't do. This is the type of thing that statisticians do. This is the type of thing that aerospace engineers do. Right? This is the type of thing that gamblers do, believe it or not. So again, itemizing how many of these things played out, right? And getting a sense of where they played out. So it's been a busy summer. I mean, this summer's been great for USD CHF. Well, let's just do this. So again, we've got a lot of tools here that make I guess we would say the intangibles tangible. And in trading, that's everything. So let me go up to the yearly part here. Sorry about that. There's a lot of data in here. Let's just go to 2023 alone, just to see how many of these showed up in all pairs. Again, it's this pattern right here. Okay, so 505 have showed up for 2023. And we got one. Well, I got two of them that showed up last night. So what are you doing not trading these? If you know Steve's material. Where? What? Oh, okay. Anyway, just saying. So I want to just bring that to your attention, that database and the idea of filling that database is what gives you the confidence to weather these little red guys that get in the way. Okay, I don't really care about the wins so much. It's usually the losses where the emotion goes, right? So you don't let those throw you off because you know you're on a higher probability win rate overall. Okay, so there's euro dollar. That's ready to go. Let's head on over to pound dollar and have a little look-see there. Again, performance is everything. And I mean, it's not like I don't trust any teachers or anything, but for me, I've got to get my teeth into it. And that was basically my task from 2011 was, is this stuff real? Can I actually see it play out? And that was my endeavor. And that's why you've got this stuff. It's only back to 2017, however, but still. Are you doing that with whatever trade system you have? Are you keeping a log of your trade system? And are you doing it in such a way that you can refer to it for that moment when you hit one of these little red guys? Okay, I can't say enough how important that is. Okay, so moving on to GU, we see pretty much the same idea. Now, the reason for that is that the US dollar is driving both pairs, right? Notice that euro dollar has a U in it. Pound dollar has a U in it. Both of these synthetic crosses contain the US dollar on the second position. So what that means is that oftentimes we will get mirror setups the opposite direction from US dollar down into GU and EU. So really, we have pretty much the identical outlay here for GU. Everything is there. I'm not sure what that little level 2 is. Let me get rid of that. I think that was an error, but you can see it's almost identical. The only thing missing in GU that EU had was that reversal at the high volume area. This one's 14 pips away from it. So sometimes we do see action away from these high volume areas, but it's not quite right on it. So that's the only variance. I mean, they're both pretty much the same thing. We're looking for reasons to go long if we see this type of setup in the proper timing with the proper confluences that happen on the lower time frames. That's what we're looking for. We also have a pretty strong outside structure up there. That is telling me that there's a lot of volume trapped on the top edge too. So what we could see, in fact, play out is we could see traps on both sides of this happening. We could see a trap high at first, and then we can see the dealer swiping it down below and then trapping back into the range. That's a very high probability type of projection there. You could also reverse it, but I think that the dealer will most likely run this thing up first. Generally speaking, they like to go to the most recent trap volume. But again, I'm not sitting here as a soothsayer or conjuring psychic. Really, you don't know. And when you know that you don't know, it's a whole lot easier to deal with this market. Okay? All you need is one stray news event that's unscheduled, throws the whole thing off, right? And we know that's definitely possible on Planet Chimp at this time. Okay, so you definitely see this possibility of trapping away from this outside structure, but predominantly I am looking to trade away from this peak formation on the bottom edge. So let me clear this stuff out, and then we'll take a picture of this one. We'll move on to our additional pairs for our pre-market. Let me stretch this out so there's a little bit of coverage for these high volume areas that are below and above the market. Click my little button, and my screenshot should show up in there, and there it isn't. Let me go ahead and open this again. I'm saving these, again, for our students. We like to keep these files, and we post them, obviously, at the end of our session and put it beneath the video. So both the template and those H1 chart pictures are available to students of BTMM. All right, so moving on to Australian dollar. So Australian dollar, actually much like many of these other pairs, it's a peak formation with an outside structure opposing. So again, you're in this place where you could see traps both directions. When you see this type of structure, oftentimes the dealers want to run back into that area and they form traps and then drop. We could see a trap high, drop, trap low, rise. We can see this actually playing out on both sides. So that's why actually all three of these pairs do have outside structures that are opposing the primary away from peak formation trap condition. Okay, so AU did have a reversal at this high volume area on the bottom edge, which is right here. So that is obviously the low of the year back there, that D1 peak. And we turned right up off that area. You can see this H4 trap, pretty nice as well. You can see how we came to that outside, where that outside structure is. You can see we came right to this zone flip. So really what we try to teach you is we try to teach you to spot these before they play out. So with, again, the tool that we have, this WSM viewer, one of the things that's most beneficial about it is this ability to get in here and make drawings of various zone flips that play out. So you can put a drawing in there, you can save it, little blue dot comes up, and then you can take it on and put it off. So you can test yourself in terms of these zone flips. So that's really something that's a skill set that needs to develop. It's one thing to see them, but it's another thing to act on them ahead of time with live money. So that is another area. Steve loves these. He's all over this material. So we'll be enjoying his webinar on Wednesday. Perhaps he'll go into that, perhaps not, but that's really one of the areas that I think that you want to focus on as a student, because oftentimes, even if you got a trade correct, and that's what we're going to talk about tomorrow night, is one thing to get into these entries. It's another thing to take it all the way to its logical termination point, which most people, frankly, only work on their entry skills. They don't also work on take profit skills, which is really, again, something along the lines of a tool that allows you to kind of jump out of the market and go in a non-linear mode where you're actually moving things back and forth, and you can find these areas and see drawings, and that is going to help you with that skill set, right? It's almost like the Saturday afternoon replay of the football game from the previous day before. All the players get around and they look at how they played, they look at how their opposing team played, they analyze what they've done. That's really what a pro does in any business. And so we like to incorporate that on Fridays for you, to get you basically involved in your evolution as a trader. So you're not sitting around waiting for it to happen, you're actually making it happen. Heaven forbid. All right, so away from peak condition, you can see we didn't get down to our 3 times ADR, but we did get H1 TDI extremes. You can see how we came across that D1 peak, which is this beautiful low of the year. You can see the high volume node on the front of that. That moved quite nicely up, so we're looking for reasons to go long. I especially like this 6407 area. And so for my own personal trading, I like to note these on the screen. And so to remind me that I'm going to want to note that on the screen, I'll go here and type zone flip, and then I'll actually write that number in there just to keep an eyeball on it. So really what we're talking about is, do I see this setup at that number? That's really kind of the main deal there. But I like to keep a running record of this, just generally speaking. 6407. 6407. And I've got the wrong color, so I can't see it. Sorry about that. Okay. 0.6407. Okay, so that gives me at least some type of heads up that there's a zone flip at this bottom edge, 164.07, that might be something to look at for traps to the long side. And I am in AFP condition, 5,200 is pointed long. I can see that I did have H1 TDI extremes on the extent of this market maker cycle. Look at how long they took to move it out of here. That's why a lot of new traders that we have get really excited about level 3 and they get smoked. A lot of times you want to wait for level 3 to develop, and sometimes it takes days to develop, right? Level 3 doesn't happen and just you instantly reverse out of there. So that's another one of these, I guess, psychological blocks a lot of traders have due to their overexcitement. So really, we love you to have that overexcitement, but we want to get you involved in your evolution in terms of you as a trader to get you into homework. We do a lot of homework together, and I'll tell you what, anybody that's been around for a while, they've got some type of track in their 6 o'clock, meaning that there is a trail behind them of efforts, right? So our best traders oftentimes have the most screenshots for what they do. Okay, moving on to EA. What do we have? We also have many days of drop. We have a peak formation. We have H1 TDI extremes. This pair as well did not get down to 3 times ADR from the previous peak, but it does have a pretty reasonably clear trap formation, so we're looking for reasons to go long. Now, this zone flip did hold at the end of the day. And it didn't go all that much, but this is one of those occasions where you don't want to trade back into a peak formation at level 1 consolidation. This is where you don't want to trade back into that peak, but look at how it anchored things, that zone flip. So we've got a line there that we can actually modify here. And so one of our traders, a lot of the stuff you see, actually, the indicators, even this tool, it's all developed by fellow traders in the group. So that's actually kind of neat to have basically a homespun type of thing. So I think I'm going to take it down here. I know it's a bit of a ways out, but that to me looks like a peak reset. So I'm just going to pop that there for the time that it might be needed down the road. So yeah, a lot of this stuff, this tool as well, this trap tool was a trader developed with me. We worked on it together. He was watching me put horizontal lines on MT4, and it was driving him nuts that I'd sit there and correct it. I mean, you go try to draw a straight line with this thing. Like, what do you're going to try to make it even? You sit there for hours doing that, right? So obviously the trick is to go in here and copy paste these two, right? But I didn't know that at that point. So Charles watched me do that and struggle, and he says, Jim, let's make an indicator for that. And so we did. So a lot of what you're seeing is an evolution of, wow, a lot of years and a lot of effort and a lot of generous souls. Okay, so EA, whoops, sorry about the time change there. Let me just grab a screenshot of this, again, as reference, as for educational reference, right? I want to see, I guess, end of the day tomorrow into the next day. I've got these things for years now. I can go back and I can look at what my preparation was, what I saw in the market at the time, and what the market did. All right, so that's one thing that gets by people a lot is this idea of empirical data versus what someone says. So you need to get empirical and forget about what people say. And the only way to do that is for you to get into the market, make it between you and the market, right? No middlemen. That's the idea. We're like the doctor that when you come to our office, we get you better and you get out, and you're not a lifelong patient. All right, so that's the skill set that we give you. It's the ability to just take it and make a living and disappear if you want to. Okay, so EA, we do also have AFP long condition. We had an H1 TDI extreme on the bottom edge, and we have a 5,200 to the long side. So not seeing any high volume areas, although we do see last week's low of the week right in here. So I actually should add that in there. So we do have that a little extra bit of anchorage for that bottom edge right here, where you can see also some high volume nodes. Notice how sexy these are. They happen before price moves. Okay, so where are we in terms of EA on the higher time frame? Let's go have a look. So these are especially interesting segments of the market because what happens when you see these large moves up or down, there's a tendency for the market to correct against all the previous systems that worked all this time. So really what you're trying to become as a trader is an adaptable trader. You're not looking to be so rigid and stiff that all you do is trade one direction and one condition. You want to also dial in variances. And one of the variances that I think is super important is when a D1 chart starts to reverse. See that D1 chart? Yes, it's coming back to some high volume areas and it might anchor there and keep going up. But this pair does have the prospect of starting what is called a D1 correction. And these catch you off guard until you go back to the D1 chart and you say, oh my gosh, look, that D1 chart was rolling over. I should have known that. Well, unfortunately, most people don't pay attention to the sumo. They just watch Junior. They don't get that part. So that's why we want to straighten that out in your mind. For all trading system, doesn't matter what you trade, make sure that when you're looking at a D1 chart that's starting to roll over, take that in consideration. So yeah, we've got a long bias tonight away from this peak, but I'm also thinking that I'm up here in high of the year and we could see it rolling away. Okay, so love to go long. However, this is my one directional bias tonight in EA is AFP long, 5,200 head long. We had that D1 trap area in the bottom, but watch out. We're also looking at a possible D1 correction. So that might actually play out in terms of the take profit. Okay, so am I going to take this all the way up, or might I actually take profit a little bit back down? Maybe I'm not looking at 180R. Maybe I'm taking profit at yesterday's high. Maybe I'm not looking for a million pips on this move. Why? Because I see that we have a D1 chart that looks like it might roll over. Again, notice the zone flip. D1 zone flip at this area. You had the high volume node that gave you the indication that a lot of transactions popped off at that area. You can see how it's a W formation on the bottom. I mean, this stuff is all over the internet in terms of what Steve taught. And yet, what is it that people really have to put together? This part. How to lose. And it's like my first lesson in rollerblading was not about rollerblading. It was about how to learn to fall on your knees with knee pads. And then when you get the confidence to fall on your knees with knee pads, well, then you start trying, right? Then you have that energy to take into it. And you're like, okay, I can, even if I fall, it's okay. I'm not scared of falling. And that's why we teach risk heavily in our group as well. That's my main passion, is teaching risk. Okay, so EA, we're done with this one. Let's save the screenshot. Looks like I already did, so let's head on over to GA. And just notice the logic of how I'm rolling through these pairs, ladies and gentlemen, because it's actually very important in terms of that first chart that I showed you early on when it comes to these volumes. Okay, so we know the US dollar is the big one. Euro is number 2, but it's less than half of number 2. And then look at China all the way down here. Okay, so we're not going to wake up one day and the Chinese yuan is going to be the global currency. Yeah, it might happen in time, but it's not going to happen tomorrow. Not going to happen in next week. But what I'm trying to get to is that when we look at the majors first, we're looking at where more of the volume is. So notice how I work this. AU, EA, and GA. EA and GA move in relation to AU, right? And of course the other pairs that are involved. But I do the same thing here. UJ, and then you look at the cross. The major, and then the cross. That's the way that I like to portray these sessions. It makes it easier. And again, when you're trading the first time, you don't realize these interrelationships. It gets very confusing, but I can guarantee you that most of you made it through grade school learning your multiplication tables. I could say 9 times 8, and I know the number comes right into your head. That's really where you need to get when it comes to these crosses and the way the majors affect them, because a lot of times the best indicator that you could ever have in your life is the major that's driving the cross that you're about to trade. Meaning the chart of the major, you can see some clear manipulation in that major, and then you're trading the cross pair like GA. I look over to AU, I see something that tells me, oh, wait a second, I can probably get a deeper take profit on this move. Let me go with that. It helps your decision-making cycle to understand what the majors are doing, even though you're trading the cross. Okay. So what I see here is I see, again, a level 3. I see the beginnings of a trap, but I don't see a trap that's had follow through. So really what we're seeing is many days of drop, H1 TDI extremes. We're not down to 3 times ADR yet. That's what this blue box is. That's for 3 times ADR. But what I do see is I see a lot of high volume areas sitting down below here. And so let's go have a look-see at them. Very similar idea to EA, right? Looks a lot like EA. We're coming back into some high volume areas. It does look like we're at a top edge of the D1 chart. Is it going to roll over like we saw back down here? And I guarantee you, and this is something that's so important, you'd have a particular trading strategy that works, and then it works, and then it works, and then it works, and all of a sudden it falls to pieces. A lot of times that's when these D1 reversals happen, because there's money that's engaged in the market at that point that you don't see, because they're the silent players. They're the hedge funds that are taking trades every 20 pips both directions with billions and billions in open float, and you don't see that, but they all roll out of it. And then when they roll out of it, it puts pressure on the market to rise, and there's no technical reason for the market to rise. That same type of thing could happen up here. So again, like EA, we're going to take note of that, and we're going to consider the possibility of a D1 correction. And that doesn't mean it's going short. I'm not saying it's going to go short. All I'm saying is that there's a potential that we start to roll over in terms of that D1 chart. Just want to keep an eye on it, right? These confluences all add up to your situational awareness that then works its way into your mind, and you're able to make decisions based on information, not on feelings. That's the big one. Making decisions based on feelings is quite a difficult one to get over. But when people come up and show you things that are that easy, that play out, 505 times in the year of 2023, it's very tempting to just jump in, right? It's tempting to go in by excitement, but we want to get you to go in by data, not by excitement. All right, so level 3 condition in GA, that's what we're looking at for GA tonight with a possible D1 correction to the downside. I've grabbed the screenshot. Let's move it over to our yen pairs and have our discussion of the UJ. And the UJ is very interesting. The UJ has been amazing. It's been in this long trend that's been fantastic, and it's been deadly for short side business of all the crosses. So again, when you're watching UJ, and notice the order that I have here, I've got UJ and then I have GJ, right? So I want to take into account what the major is doing. When I know the major is running long like this, that's going to make me somewhat suspect of longs, right? Shorts in a pair that has J on the backside of it. Okay, thus the GJ long last night, right? So there's a lot of validity into looking at the majors to then gain situational awareness that helps you formulate your best trading choices. Now, here's a fantastic example. It's almost, I have to ask the question again. Sometimes this happens. Most of the time this happens. It's as if the market makers do stuff that allows us to talk about it. I know I'm seeing dogs and cats in the clouds when I say that, but maybe I'm not. I don't know. It's pretty outstanding when you take in consideration a lot of what we teach and how often it plays out. And so, yeah, the quest is to monetize it. But there's an AFP that's sitting back to the left. And here's this idea of all this liquidity that's there. And you have a bunch of traders that are out of their short positions. They get out. And now the market drifts back up very quickly. Now, what would you say if you saw one of these here? Okay, this is what I'm getting at here. What would you say if you saw one of these right here? And this was last night. Okay, so we're not going too far back. What would you say if you saw one of these right off this high volume area of this previous AFP? Also, not technically in line with D1 trend, but certainly it has been in line with D1 trend. Well, let's go have a look-see. There we go. There we go. Don't have to make it up. Thank you, market makers. You make my job really easy. But then again, they're making money off this move. So don't kid yourself. This manipulation is super effective, and we're going to show you, at least I'm going to do my best to show you tomorrow night what's happening on this type of move right here that hopefully you'll forever keep in the back of your mind and say, okay, I understand how these manipulations happen. Again, there's one thing I like more than money. Well, there's probably many things I like more than money, but the one thing that I like more than money is basically keeping people from being marks and saying, you know what, you might want to look at it this way. There's a spiritual payoff with that just is unfathomable. So I love doing that. So I'm going to show you why that manipulation worked. But anyway, there it is right there in living color from last night, from today. Basically beautiful trade. And then again, we have something else that's shaping up in the Asia pattern section. We'll get into that tomorrow night too. There's been we've taken this work a long way as it's evolved. It's actually changed, at least in terms of the way that I've traded it. I know Carr's evolved. His thing is refined. Steve's totally refined. Everything is a lot different than what you might have been previously exposed to. But that was one of our London patterns in there. So that was just a way of saying, thanks, Steve. And let's go have a look at UJ because it's interesting, again, once you know you have data like this. All right, so in the year 2023, how many type 1 London patterns? Okay, so we've had 36 so far this year. How many of them are in line with the D1 trend? 17 of them in line with the D1 trend. How many in AFP condition? Only 3. Okay, how many in H1 subcount condition? 13. So you can see the division of the way the higher time frame stuff works. So a majority of them are in line with your D1 trend. Pretty much all these, I would bet, are to the long side. But anyway, it's been a good pair. It's been a good year. I guess might as well take it all the way just to have the data. In terms of the data set, we have 153 type 1 London patterns in USD JPY going back to 117. Okay, so anyway, just wanted to get that in there because we oftentimes say things and believe things as opposed to see things and show things, right? Empirical evidence, guys. That's why court systems are based on evidence. They're not based on hearsay. It's the same. You need to get that with the markets. You need to find a way to create for yourself a probability window that doesn't quit every time you get a loss. And that is the bigger picture. I don't care. I can show you these manipulations. We could show you 20 years of hard data, this thing. And in my case, I go back to 2017. So what is that? 18, 19, 20, 1, 2, 3. I got to show you 7 years of hard data with this stuff. But if you can't get over your losing trades, it's going to be tough for you to pull the trigger the next time. All right, so UJ, peak formation. This is a case where we can look two ways at this. The way that I'm going to look at it primarily is peak formation away from peak short. So my first bias, the first way that I'm going to look for setups tonight will be this red box. AFP short, 5,200 headed short. I can see that this inducement phase that ran up cleared my 3 times ADR condition and as well gave me H1 TDI extremes. So that was a pretty nice inducement phase that had a lot of movement to it. That might correct to the downside. Just a little bit of note of interest, this green line that's traveling right through here is very interesting because that's actually the 1998 high of year. 1998 high of year there. Those are high volume, super high volume areas. They're areas where price has a tendency to go back to and run away from. So we could see finally this drop in USD JPY. As well, you can see that the gap open was at least 50 pips. So that greater than 50 pip gap open gave us the level 1 into level 2. Now I do a sub count sometimes, or I would call this an alternate count that I use the black numbers for. Mostly I'm doing a count with the white digits, right? So what we could say is that if we do get another setup tonight that trades short away from this peak formation and it runs down, then I'd transition over into the white letters. Right, so then I'd put another 1-2 over here. But this is definitely the same type of thing where the dealers actually did a false move back up towards the peak, trapped traders, and then ran it short. Okay, so this is the type of thing. Again, we'll show you how this works more tomorrow night, but that was your top edge right there of that move. So again, gap open, they dropped it, they rose up, created the trap, and then ran the stops, essentially running margin on people that were in drawdown from this move. So I don't want to get too heavy with terms because I don't want to spook new people away, but that's, again, something that you need to understand. You need to understand the dynamics as if you were a dealer. You have to put yourself in the position of a dealer. And what does that mean? A person that's in the position to coordinate multiple liquidity providers and aggregate all the data from the more than 3,000 brokers to see how the market is behaving. Right? So that's a tall order. I want you to look at 3,000 markets and simplify it on your charts, make sure that you're able to see where all the stops are. And then I want you to think of how you can take advantage of that. Right? So that's, again, it's an evolution. It's not something you're going to get right away, but that's where we want to get you to. Okay, so I have a dual bias here as well. You can see this trap on the bottom edge that we talked about in terms of this lovely London pattern that was down here on the 15-minute chart. Nice London pattern. We've got that also creating a possible inducement short, actually a re-inducement short, and then a kill shot long. We've got another re-inducement back towards the peak and a kill shot short. So this one lays out similar to some of these other pairs where we could see that pattern show up on the bottom edge. And then in the New York session, we could see a reversal like that. Very typical for that to happen. Again, what am I looking for? I'm really looking for this type of thing away from this trap, but I'm also looking for the same thing on the other side. Right? I'm also looking for it there. So this is one of the cases where it's an AFP on both sides of the market. And that makes a whole lot of sense because we're up into these super high liquidity areas, which is this 1998 high, right? So we're sitting up there. There's a ton of volume up here. So we could see the dealers working both sides of the market. So we do have actually a layout here that gives us opportunities both directions in UJ. So let's go ahead and save that screenshot. Actually, I just pressed the button here. That was the old way to do it. This is the new way. It's always fun to discover new tools. There's tons of them. It's amazing to see the market for MT4, where it's gone and what it's done. And don't let anybody give you any illusions of the MT4 being something that is only done in the retail space, because I know of basically institutional accounts where they set up MT4s. Okay, so don't think that just because you're using MT4 you're semi-pro. That was one of these fables that was taught way back in the day. But anyway, we don't need to go there. That's the platform we like to use. And again, it's used in many institutional brokers that require basically minimum of 11 million capital in order to open an account. And they'll get you on MT4. Just saying. Okay. So GJ, what do we have? Same type of thing with this D1 chart looking like it might want to correct. Now, once a correction starts to get going, it has a tendency to blast through all of these levels. Right? So we don't see as much of an example on this bottom edge. It's a little whippy. You can see the market's a little whippy in the GJ down here. But typically when we see a long run like that, it does sometimes start this cascading effect. And that's why I've got this little red box filled in here for possible D1 correction. So we want to watch that. In terms of the long side bias, I can make a case both directions. But one of the primary things that I see here that I want to make you triply aware of is this idea of what a wedge is. And a wedge is a place where there's less liquidity as time goes on. You can see people dumping trades on both sides. So really, a wedge oftentimes is not the most advantageous place to trade. right? So when you see a wedge, oftentimes you're in the range condition of the dealer's playbook. And in case you don't know what the next part is, you're waiting for an inducement. So really when it comes to GJ, I'm waiting for a strong inducement either direction. When I see these sideways triangles, I know the dealer doesn't have an advantage either way. He's got to make the advantage. The dealer's got to create the advantage. He doesn't quite have it there yet. You can see the trap high, trap low. He's got volume trapped on both sides. Again, looking at the way this possible D1 correction can occur, I've got my eyes on that as well. But you can see we're down here in level 3. So we're going to go with a level 3. We've got H1 TDI extremes, but you can see that we're nowhere near the 3 times ADR condition, which is basically stacking up ADR 3 times. We're not in this area. You can see that we do have a harmonic that's in play. So harmonic to the upside, that's this box. And we can see that as well, we have a high volume area where price reversed today off that 183.017, which if we go back into the daily chart, you'll see is this guy over here. It's a zone flip on the top edge of that bar. And I can guarantee you that line was there way before this happened. And that's really the type of thing that we want to instill in everybody that works with us, is to develop the skill to see this stuff before it happens. And we show you how to do that. Anyhow, so GJ looking both directions. I also want to continue to remind you of range condition. Whenever I see a triangle like that, when I see that type of wedge forming, I know that the dealers themselves are probably prepping to create an inducement phase in this particular instrument before they're going to make any sort of large reversal. So what does that mean? Rehit down to the bottom edge, down to the low, maybe a rehit back to the high of Friday, right? So looking for extremes in GJ, not super advantageous, but again, the trade today, ladies and gents, where you go, and again, this is, to me, it's what I've done for myself, and I extend it out to all our students because it's a joy to do it. Again, my value is in making people not the mark more than it is the trinkets. But there you go. All right, last night. So GJ, beautiful. And again, this is not something that's happened once or twice. There I go into the database. Let's go look at the status of GJ for the year. Love this pair. It's a great pair. It does have a little wide movements sometimes, especially when it comes to the spreads. Sometimes they widen out a little bit. Some people can't handle that, but I love it. So check it out. For 2023, we have 47 examples of that. Type 1 London pattern, which would be this guy right here. So that's a good high number. And all I have to understand is there's going to be losses in there. There are going to be losses. And so what I want to do is I want to set myself up to face the losses before they happen. And that would lead to an hour-and-a-half discussion that we don't have time for right now, but that's really what we're talking about when it comes to attenuating your mind's ability to get out of the emotions when you have a loss. And really, the way you get out of that is you're more excited by the overall win rate that you've established through probabilities, through math, through certainty. As much as you can be certain, a win rate of 72% is going to do you just fine, but you have to basically tolerate 28% of the time losses. Some of those obviously become scratch outs, but you get what I'm saying. Okay, so that's really the big deal. So let's go ahead and save that screenshot and let's move it on to the CAD pairs. Love seeing the Canadian dollar doing its thing here. Let's go have a little look-see here. So Canadian dollar looks to me as in level 2 condition. I do like to project out the count. Once I get a completed move from 1 to 2, I go ahead and continue that count. And it's baffling how many times actually price follows that. And again, I'm not trying to instill people to get out there and just drop trades because someone said so. I mean, I got a little artwork for that. That's this guy. I don't want anybody to be this guy. This is the tendency. Most retail traders are this guy. You can't be that. Stop it. Do not do that. You're not going to open a business first day with enthusiasm without doing any preparation. That's just not the way it works. So anyway, I'm not saying go short here. What I'm saying is that we're in level 2. And again, we can see this type of D1 correction we just talked about. Pull back and drop, that's possible. Level 2, however, is an area of the market where the dealers oftentimes step aside and allow the market participants to run price. For those of you that have reviewed the pirated Steve Mauro videos that are out there on the internet, I'm not sure if you even remember that sentence, but that's the case with level 2. Level 2 is the least predictable of all our levels. So level 2 short, our 5200 is headed short. We also have that possible D1 correction in USD CAD. We have an outside structural long end as well. We have a sub count, which is really just this inducement phase starting to play out. Now it's already moved up, so I'm not really using that as a guide other than to anchor that outside structure. So not really looking to go long because of this sub count. It's already played out. Really, the objective was to go long somewhere on this bottom edge when this sub count was fresh. Okay, you can see it did come into our 135.55 area there, so I want to make sure that's showing. Again, I'd like to keep notes of this. It's overkill right here. As a trader, you don't need all this stuff. You would simplify it all down to this guy. With 3 higher time frame confluences, Carr has his higher time frame confluences. So we do have slightly different styles and approaches. So it really depends on what your aptitude is for detail work. I have a high aptitude for detail work. I love it. My Friday nights are doing nothing but going into these databases. I mean, it doesn't take nearly as long as it used to. It's only an hour and a half, but still. Like, you keep a record of it, right? If you were a business owner, the first thing you do is find a way to keep your finger on what's happening. What's the market like? What are people buying? What are they not buying? What are my competitors doing? What are they not doing? Right? So all these obvious things that get by people is quite interesting. Anyway, so USD CAD, we are looking for L2 short. Level 2 short doesn't mean it's absolutely going short. As I said, we have the outside structure. We have the high volume area that anchored it. So we could see this actually happening in any direction. Let's look at oil, because oil does have a tendency to make an impact on what Canadian dollar does. There's a 60% correlation I found, my own personal views on this, that 60% of the time oil will make a move and then CAD will go opposite of the oil. So what is a correlation? A correlation is that if oil rises, CAD has a tendency to drop. Okay? If oil drops, CAD has a tendency to rise 60% of the time. That drives people nuts. Think about it. It's a correlation that only happens 60% of the time. But that's the type of detail that you want to get to in your own evolution as a trader. But we can see oil hanging tough on the top edge, sitting up there. It hasn't rolled over, but that's a level 3 that wants to correct south, but it hasn't really done so yet. So we could see continued motion here in our oil market headed higher. We could definitely see that. And what that'll do is that'll have a tendency to drop down the Canadian dollar. And the reason for that is really simple. It's nothing I made up because I'm, someone special. It has nothing to do with that. Canada exports a lot of oil. They're a commodity exporting nation. When it comes to buying their oil, guess what? They only sell in Canadian dollars. So if you were going to buy a lot of oil from Canada, you would have to first buy Canadian dollars. So when oil price goes up, Canadian dollar becomes more valuable. Okay, super easy stuff. Again, like the multiplication tables, it might not click in your first exposure to it, but give it some time. You'll see that being like a super nice indicator to have. Basically, if I see oil doing something that's really obvious, I know it's going to drive CAD. That's like a really cool indicator that no one uses. We use it. I use it. And it's especially beneficial, I think, if you were to watch some of these markets that are really the global central, one of the central markets is oil, right? And remember, the way oil is priced right now, it's oil US dollar. So there's a dollar part inside there as well. Okay, so moving on to Euro Canadian here, looking at our pre-market. Euro Canadian I see as a level 3 long. Again, the green is long. I've got an H4 harmonic on the bottom edge. You can see this right here. And I can see that on the top edge, I have a D1 trend. So there are just a couple pairs in the market now that are in D1 trends, Euro Canadian being one of them. It's a lovely pair when it gets trending. It's got a lot of meat when it gets trending. So keep that in mind. We're only at the beginning of a possible trend here, but we like to see that as one of our higher time frame confluences. So what I'm looking at in terms of the structure is all the way back here. So this is my current market maker cycle structure that I'm projecting out into the future. You can see it's gone sideways a bit, but you do have actionable trades on both sides of the market when you are in level 3. So it's been in level 3 for quite some time, but I believe that that's where it is. Now that doesn't mean it can't drop further. Just everything about it looks like it wants to hold from the bottom edge here. I'm going to also add this outside structure. Actually, I want to keep this one back here and just add it to the bottom because I do see an outside structure. Now, an outside structure is a lot like a little mini tiny peak formation. And so there's definitely a New York reversal in there. So these are what I need to add to the list. So we've had just, again, I'm adding all this stuff. I'm like the accumulating beaver here, just grabbing little nuts. It's like, I guess, my hobby. So what is that? It's a New York trade, EC, Monday, and that's New York. So it was a New York trade down here. That would be on the 5-minute chart. Let's go have a little look-see on that. You can see the reversal right there. I'm not sure if there was news. It does look like there was news, but that's an actionable trade right there for sure. Okay, so super nice New York reversal there in EC today. So that adds a degree of trap volume here. It didn't give us our 50 pip close that we like to see. Whoopsie, sorry about all that. But we do have what we would consider as a pretty strong outside structure, but we also have this D1 downtrend. So again, this pair is not in a condition to be clear of a bias either direction. So it's an interesting night, actually, looking through what we've talked about. We've gone from what would be considered high probability one-way bias pairs, and we've sort of made this gradation over into these pairs that are biased either direction, which is a kind of neat thing. Again, I oftentimes wonder if the market makers aren't helping us teach this in some way. I know that's completely crazy, and I'm seeing cats and dogs in the clouds, but still, it's sometimes a little bit baffling how clear things are. Okay, so moving on to USD CHF. This is the final pair we're going to look at, and I'll take a little bit of Q&A for you. But the USD CHF we currently have with a D1 long trend, 5,200 is headed long, and we've got this extreme of 3 times ADR. We have H1 TDI extremes, and we're in level 3. Okay, so level 3 condition and H1 TDI extremes. Let's just walk it over here and start to show you the larger architecture. For a bit of time, we were stalking this bottom edge right here. You can see how price came up to it and banged its head off of it and rolled back down, and then it worked its way up to the next zone flip, and it's now through that. So we could see this pair certainly rising. Whenever you're in level 3, basically your prediction of which direction is going to go really isn't present. You're ready for it to go either direction, and especially when you're in a D1 trend like we are here, that thing can take off and head in one direction pretty easily. So we are watching. The break of this top edge could perhaps happen. We're in level 3, but we've been sitting in this range condition for quite some time. And so really what we like to do, and one of the most fascinating things that I've found with Steve's work, is extrapolating this pattern out on the higher time frames and the lower time frames. And so that's what I'm going to try to get to you tomorrow in my DMR session proper. So I'll show you some examples of how this pattern plays out in other time frames, mostly on the lower side, that you might not be aware of, which is definitely helpful for these types of things. So what are we saying? We might see a range here. We might see a false trap on either side, and then the reversal away from that trap. So start to think about these patterns on a slightly larger time frame as well. So a break of this top edge area with some type of trapping, that might be nice to go short. A break below this area with trapping might be an opportunity to go long. Now that's going to be most likely a higher time frame type of occasion. But either way, I do know that my D1 trend is long for USD CHF tonight. So one of the things that I'll be looking for will be one of these on the bottom edge. Will we get it? We might not. I'd love to see some type of break of the Asia box to the downside and on higher. So again, we'll wrap it up with our dollar looking back to where we are. So again, we've made a lot of determinations that the dollar does still have strength behind it. The bonds are paying pretty good interest for this now. So we could see in the coming days a continuation of a rise here in the US dollar, but we are AFP short for tonight. And so we're hoping for a manipulation pattern on the short side with US dollar, essentially looking for this type of play in the US dollar short, not necessarily trading the US dollar, but watching for that kind of move so that perhaps in these pairs back here to the left, we get this type of a move. Okay, so super simple idea. Let's go ahead and save this chart picture, and then we'll go ahead and take a few questions here. I want to make sure that's ready to go. Oh, I resaved the US dollar. Let me go to UF. Okay, so USD CHF, high volume areas above and below, all ready to go. So these templates will be posted as well just after our session for our students to use them for the next day or so. Okay, so that'll wrap our pre-market session. I want to ask if anybody has any questions they want to drop here, let me know. Okay, great question from Kevin. Thanks for asking this. I noticed most of the BTMM focused on the Euro session. Can a person that can only trade New York session make a good system? Yeah, absolutely. Absolutely. And I want to answer your question with empirical data, not my own opinion. New York reversals, we're going to look at, well, let's not look at GJ. Let's look at all these. And this is just one of several signature trades. So for the year of 2023, we've seen 154 New York reversals. And we've got all sorts of other sub-type of trades that we can look at. One of my favorites that I'm going to go over tomorrow night will be this M1 trap to the 0-0. 127 of those in New York session. So let's go to the New York session. Okay, so it's only New York session. So I eliminate London out of it. I get that. Okay, so that's the M1 trap through 0-0. M1 trap through 50. Got a few of those, 20 of those in New York session. But really, the New York reversal is the primary trade. That's happened 151 times in 2023. So there they all are in all the pairs. So New York trading is definitely happening. Not only that, but we have Asia pattern trading now, guys. I know that sounds kind of crazy. And Steve warned us all away from this thing initially, but something happened, and now we have it. And that will never happen in New York, so sorry about that filter. But we've got Asia as well. Some people can trade Asia. Some people can't. You can see there are fewer setups that happen, but it's there. And again, what we're looking at is we're looking at this structure and this pattern superimposed in Asia. I'll cover it tomorrow night. And we're also looking for New York session reversals. But the stuff is there. So again, I personally prefer these lower time frame setups. And again, all pairs in New York. I love the trap through 00s, and you can see 48 of them across all pairs. Let's see what we have through the 50, a few there. Let's see the Mayo. All right, so they add up. There are fewer of them, but I love these setups. And they do add up. So you have an ability to jump down on the M1 chart and take some of these reversals that oftentimes do play out really nicely. Now, the one thing additionally to consider is this London pattern that we just showed you sometimes does play out in New York. So what I'm saying here is that this pattern that we showed you in terms of 2023, I do see 26 occasions where this pattern has played out successfully. Okay, now again, all of this has got the caveat on it. Yeah, there's some losses in there, but you should do your homework before you put live money in there to determine that you have at least a 70% or greater win rate. Right? That's one of the big glaring errors that most traders miss. Okay, so great questions. What else do we have here? Let's see. My MT4 drawings aren't auto-saving. Do you know? Auto-save your MT4 drawings. That's easy. You want to go over here and click on the thing and go template, save template. Okay, so click on the background. I'm here, save template. I like to save a template to my documents folder. So really, I save my templates into the documents folder, into a DMR only folder right here. So this is where I save the stuff. And what that allows me to do is it allows me to save templates from multiple MT4s. I run a lot of MT4s. And we show you some fun stuff like allocating CPUs and stuff and how you can get more speed out of your computer when you do multiple MT4. So that's a great question. Do you wait for zone flips after 180R level 3? You know, it depends. I don't really think that that's enough to go on. I need something in addition to a zone flip. I really like to see the timing and the pattern playing out with the zone flips. So I'm a little more of a purist with the zone flips. I know we have some traders that trade them exclusively, but I like to see a couple more confluences on top of them. So I really don't wait for 180R to play out. Can you talk about the safety trade? Yeah, this is really the safety trade that we. That's why I wonder what's with the market makers, man. They sometimes show. So we're looking for safety trades: EU, GU, AU, EA. Safety trades both directions in UJ. So 4 pairs in unidirectional safety trade outlook, including the US dollar. You'd have to be with the ICE exchange to trade that directly. So you might not be able to trade that with your MT4. But that one's an AFP as well. So 1, 2, 3, 4, 5 in AFP. UJ is an AFP both directions. So I use the term AFP. That also means level 1. That also implies the safety trade. So they kind of work together. So to explain the safety trade would take a little bit more time than I have at this time. There's a lot to it. There's a manipulation that goes on that's really clear once you see the backside of it. But that's about all I can say right now about the safety trade, but I can tell you that it's possible tonight to see them. Okay, isn't a 50% win rate and a 2-to-1 also acceptable? Absolutely, Kevin. If you want to do a 50-50 win rate and you have a 2-to-1, that works. Right? There's a large amount of potential in terms of your win rate and your hit rate. Your hit rate and your reward risk ratios, those all go together. That's that. Again, it's all math. At the end of the day, it's math. You should have an anchor point. Let's go back to what I talked about with learning to rollerblade. The first thing that a good rollerblade instructor would do was he'd give you knee pads and elbow pads and teach you how to fall forward. So if you ever fall, you fall on those pads. And so the same thing goes with your win rate. It becomes that place that you look to. It's like, oh my God, I took a stop out and that was nasty because it's a couple grand. What do I do? Well, you look back over to your win rate, and your win rate is generated by you going back through your charts for at least a year. I like to get people to go 2 years and find the wins and losses and bring them all into some document, some way to lay it out so it becomes really clear what your win rate is. So that's math. At the end of the day, it's math that's going to give you that sense of, okay, I can fall. And in some cases, you could see 4 in a row here. This is a 70% win rate. It's a truly epic win rate with potential to build any account in any market. But the fact that there's 4 in a row would throw most people off unless they have those elbow pads and knee pads. And what is that? Math. At the end of the day, it's math. For traders, it's math. What is a highly essential trading psychology tip to keep in mind? Oh boy. All right, well, let's go. I'm going to try to answer your question by going into our forum. I want to just bring you guys into Jim's area. And so Carr obviously has his sessions all lined up, Carr's DMR topic index, but I want to take you into Jim's topic index. I want to take you down to this mind camp area because that's actually one of my favorite topics in terms of trading. I love this stuff, so I talk about it a lot. And we dig deep into a lot of this kind of material, right? So one of the things that struck me early on was that everybody thought Freud was the beginning of psychology, but it really wasn't. It was these guys back in 1887, right, with the Salpêtrière Clinic, which is like 135 years ago. This is Mr. Tourette's, Tourette's syndrome, that's the guy. So they're all taking notes, watching how Dr. Charcot is putting the lady into a state of deep hypnosis within 30 seconds. And they're all taking notes because there was a lot more that went on in this clinic than what is commonly known. And so really what we try to do is we try to get you to have the knowledge of how the subconscious works, how suggestion works, how you can apply that into yourself. And then no longer are you relying on the expert and you taking the orders, right? So you're extracting yourself from this world of other people making choices and determinations for you. You're putting yourself into the driver's seat. And through this series of videos, I've got a bunch of them, I try to show you how that's done. And so these are all sessions based on the subconscious mind, the principles of the subconscious mind and how it works. And I've got a lot of classes in here. We talk about subconscious below, the conscious mind, left brain, right brain. These are long. These are hours and hours and hours of stuff. And again, the Salpêtrière Clinic was where it all got anchored. 135 years ago, you didn't know about it. Nobody knows about it. But I'll guarantee you, Freud knew about it way before. Freud knew about it while he was a teenager, basically, is the idea. So when Freud was a teenager, he was learning from the guys that were actually studying the way the subconscious mind works. So that to me is the number one answer to your question. What do you need? Psychology. You need an awareness of what your core constituent components are to your personality. Conscious mind, the barrier between the subconscious mind and then your body perceptions and environment. And that's not something you get right away. It's something you actually work into your type of approach. But what we try to do is we try to make it extremely clear for you. So you create what are called sensory trigger inputs. Okay, so what does that mean? That means that I roll to the edge of one of these trade setups. I don't care where it is. I guess I can click into one of these. Let's just take this one, for example. I roll into the front edge of that, and I commit that to my subconscious mind, knowing it's going to rise up. Okay, so that, again, is one of the types of things that is very easy to explain, but it's much different once you commit yourself to putting those ideas down into your subconscious mind. And the other thing is that there's a lot of dark stuff, and the common subconscious mind is filled with garbage. So you have to kind of clear all that stuff out too. So it's not an easy ride to say that you're going to program yourself out of your 22,000 hours of schooling. Yeah, you can, but it's usually going to entail some work on your side. And then eventually you start to get a very narrow area of focus, and then all the stuff that used to be of concern to you no longer is of concern, and then you trade efficiently, right? So there's a lot there. Sorry, I can't just spend hours and hours. I love the stuff, so that's why I keep an entire section in the forum just for that. It's a great question, Sean. I appreciate that. So yeah, we could sit here all night, but the main thing, Sean, is don't be this guy. Don't be this guy. Put yourself into a probabilistic mindset and get yourself to the point that you have the discipline to watch your trade day after day after day, even if you're not in it, and then make a list of them, and then hopefully get to the point that you can break it down here. And then you can break it down by wins and losses too. That's especially important. So our database allows us to put wins and losses, and with a click of a button, you can get a sense of how many wins and how many losses you have, and you can determine this hit rate. It's very, very important to do that type of work. So interestingly enough, if you go to the bottom of this, we don't have all night here, but if you go to the bottom of this sequence of sessions, I go into this one, which is where you start out with a psychology mindset. You start to try to get rid of the demons inside your head. You try to get into this. Why do I do this when I shouldn't do it? Why do I not do this when I should do it? You get that parts first. And then eventually what happens is you unload the burden of risk taking from these negative things, and then you bridge it into the algo. And the algo's where things start to get really fresh and clean. And that's essentially a whole section in the forum that you can spend your own time in. We've got tons of videos down here. But you're eventually getting to the point that you develop a win rate. All right, let's see if I got one here, everyone. So you develop a win rate that's static. So my win rate is 66%. I know that I'm taking 2 to 1 on that, so I get an effective win rate of 85.19. You get this stuff in your head very clear. You get it down on an Excel sheet that we provide, and you're able to get your winning percentage average rate. Now, that doesn't mean you're winning every time. In fact, it's quite the contrary. You're going to lose a third of the time with a 66% win rate. So you're prepared for those losses. You can see how they lay out in terms of time, and you develop this, right? This isn't something that just happens, and everybody's going to have a slightly different approach. You might only be available for the first couple hours in New York. You might not be available for the entirety of the New York session. So you need to attenuate your window of opportunity into your rule set, and then you need to test your rule set over time. And basically, this is the same thing that our modern aviation world does. Every time a plane crashes, they shut them down, and they go and study it, and they try to figure out, well, what went wrong? And so you're doing that before you get stopped out. So this is kind of building up to that. So this is your effective win rate, your amount of wins, your amount of losses, your stop loss to break evens, and you plot them on this grid, and then you end up getting some type of curve there, and then you'll apply your 2 to 1 effective win rate on top of your essential win rate, right? So that's all in this section, and that's a big section. I can't possibly give you all of that at once, but there you go. Okay, can I get your template? Yeah, join our group. My template's posted in the forum. In fact, once we stop here, I post the templates and this stuff immediately to it. So join us. I guess maybe I should go to that one now. Let me give me a second, guys. Again, we're traders first and presenters second, so I'm not super slick with PowerPoint here. In fact, this is all homespun, as you can tell. But hey, the proof is in the pudding. So yeah, if you want to get the templates and all that, just I guess give Steve an email. support@beatthemarketmaker.com. You can message Steve at Instagram. Become part of our family. I give my templates out Monday and Tuesday nights, and they're good for the rest of the week because I like to get all this stuff on it, right? So from the daily standpoint, I like to make sure that there's high volume areas on both sides of the market. So that's for those that are interested in that. Okay, I know individuals have their own confluences and optimize over time, and the market won't always present what we look for. But as a guideline for beginners, how many confluences would you advise we look to get started with? That's a genius question. Wow. I mean, I know that there's a great book written by Mark Douglas where he basically walks you through a single EMA cross type of confluence. I think it involves 2 confluences. So I'm going to state that more is not better when it comes to confluences. Some trading systems will work very well with just a couple confluences. So I don't want to give you the impression that complexity is a benefit to you, because really complexity is not. You want to get to the point that you're only looking for things that are important, not all the stuff that's not there. So as a new trader, you'll have a tendency to overload your charts with crap. You'll have a tendency to look at a bunch of confluences, and every loss that you take, right, when you get one of these red squares, you'll have a tendency to jump over into the next trading system and take a piece from that. Cherry picking from systems, looking for little tricks here and there, is a sure way to blow yourself up. You want to make sure that all of them fit together in a cohesive, repeatable structure. So I can't really come to a number, but I could say 2 is probably the minimum, because I don't know of any system that has fewer than 2. I do know that our H150 bounce is basically a 2 confluence thing. I know Car's got more confluences wrapped up in it, but it starts with 2 basic ones. I'm sure, I'm not the expert in that. Car's the expert in the bounces, but that's a pretty simple one. I don't think it goes well beyond 3 or 4 confluences. So I think in your question, Anderson, you don't want to overload yourself with confluences, but at the same time, you don't want to have too few of them that the randomness starts to take you out. It's a great question. You guys are asking amazing questions. What's your opinion about trading only one pair you're familiar with? It's great. I've seen there are members in our group that take the M1 material that I'm going to show you tomorrow night. A buddy of mine in Nigeria, actually, Tante, takes the stuff and just nails it. One pair. He only trades the GU. And it's very much about using the M1 with this pattern and a bunch of other confluences that we teach. So yeah, you can do that. I think you can do that. Now, the trade-off with doing that is that you'll need to have more signature trades for one pair, because if you're just going to wait for just this pattern on one pair to play out, you might wait a week or 2, right? And we've established that with our list of these. Even the densest of the type 1 London patterns, let's go back into all session. Actually, let's go to London. So we're going to go all pairs from 2023. So they're 479. That's definitely not every day. And this is across all pairs. So let's just say you're interested in pound dollar. Okay, so pound dollar has produced 51 type 1 London patterns. That's still a lot. On the basic, I guess we got 1, 2, 3. So from London, in 2023, we've got 51 examples of a London pattern. That's not every day. So in some cases, that won't be enough trades. So you have to add additional setups, usually 2 or 3 signature trades if you're only looking for one pair. Great questions. You guys are all over it. Appreciate your interest. Which session do you trade the most, London? But I trade them all. In fact, I started out, the whole reason I'm here is that I was a avid New York session trader, but the problem was I was usually tied up in the early part of New York. I got clearer chart vision from about 10 a.m. Eastern Standard Time on, and I got wrapped around this thing that we now call a tea time trade, which is 4 p.m. in London, 11 a.m. Eastern. And I basically built an account and sent Steve the statements. And I was doing it on demo because I was still a professional in my area that I was in. And I wasn't using live money, but I was using a demo. And at the end of the month, I'd zip him my statement off the MT4, and it was up every month. I think I went like 700% in 6-7 months in demo, but still I was doing a professional job. And so I was mostly trading the New York session. And so that's how I got involved. He says, would you like to do a presentation on Sunday? I think Carr asked me, and I said, yeah. And then I got madly addicted to it, and people liked it. So again, my thing is that money's it's underneath, man. Money's the second to so many things in this world. Money is number 2 to so many things. And so the joy of watching success. One of my favorite stories of a student that's had success is a gal down in Australia who's a truck driver. It's like, what? And you got to see the trucks down in Australia they have. They're the 3-trailer kind. They're massive. And so she was all caught up in the COOF, but the COOF 19 allowed her to learn a trade. And she got herself out of all the necessities that they were projecting onto people, and she turned herself into a profitable trader, for which she still is a profitable trader, also taking care of her mother during that. And was able to jump out of the truck thing because she didn't want to get, the various mandates. And yeah, we got a bunch of them. Anyway, so that's my joy. One of them. And again, doing well is also another thing. The pattern trumps the indicator. Is that correct? Yes, Jackie. However, we use them together. I like to use because remember, if you're trying to get into a statistical, repeatable structure with your material, if you're trying to get into something that happens on a regular enough basis that you can go back and say it would have won here, it would have lost here, it would have lost here, it would have lost here, it would have lost, it would have won, it would have won, it would have lost. You need to have the indicators to help give you that grid, to help give you that anchor point to the pattern itself, to then have a repeatable thing that you can actually run through an algo loop, which is essentially you're getting a win rate of past activity. So you need the indicators for that. Okay, how do I start doing homework? Boy, that's a great question. Basically, the first way, and I know this sounds completely insane. I wish I had done it. I would have been a better trader had I decided to do it initially. I know it sounds completely pedestrian, but this gentleman asked a fantastic question for which I'm going to give you, I think, a very important answer. And that is that I would put projections on my screen and leave them and take a picture of that and come back the next day and see what it did. That's pretty much what we're doing here tonight. That's kind of what we're talking about here, is a tendency for the market to rise in these pairs and drop in this pair. And so I know that sounds extremely pedestrian, but that's a way for you to test your ability to see stuff. And again, you're not going to be able to do that at first, but what we like to coach people is we like to coach people into validating all the signature trades we have, and we have a bunch of them. So in terms of the signature trades, we have so many of these. So what I would do is that after you have any type of signature trade of value, is I would go back into it. Zone retest, that's one of Steve's. I would go back into it and then basically start marking it up and send it to the instructors to make sure you're seeing the trade properly. So you want to learn a technical trade first. And I guess that we've got that here. So let me just jump back into this section. And I've got a screenshot for that. And it's an extremely important one down here. Fixed chart markups. You want to mark up you want to make sure you know the setup, right? And then you want to learn the setup on the edge. At that point, you can start to do your algo work and you can bring things forward, right? So that's actually a really important one here, because most people do homework frivolously and they don't have an intention. Your intention of the homework is to get to this point, that you have a repeatable signature trade that does the same stuff every time, that you can extract your emotions out of. You can take yourself completely out of it. Like, for instance, the trade setup that happened in GU today, rather, I'm sorry, in GJ last night that I was focused on, this was to me, it's a no-brainer. Just get in it, and it's going to daily open price if it can get above Asia midline and be done with it. I like to trade between the zeros and 50s. I'll show you a lot of that tomorrow night. But that's, to me, it's a mechanical thing. It's like just there's no emotion in it because I know that it has a win rate up here in the 70s. Okay, so you need the indicators to get there, but at the same time, you don't want to diss them. But so homework is about learning a signature trade and then marking it up. So that's something that's really important. Sir, I know the trend, but I don't know how to enter the market. Can you teach us about entry? I'd love to teach you, Lennon, the entry thing, but there's, again, look at all these signature trades here. So we have different rules for all these signature trades. I'd be here all night to teach you all of these. Right? So for the particular one that we know that's on the internet right now, it's the close above the 50 EMA. Rather, close above the 13 EMA. So let me go back into GJ and just show that to you. Look, we know this one is everywhere on the internet. So I'm going to show you a technical entry. And actually, I don't even need to show. I've got the darn chart right here. Why did I do that? I don't need to go back. Actually, I've got it right here. So one of the technical entries is a close above the 13 EMA. Right? So there you go. So, that's everywhere on the internet. You know, it's one of the ones that's in the class, but there it is. There's your type 1 London pattern on the 15-minute chart. There's your close above the 13 EMA, stop loss below the bottom edge. That's the basis of the London pattern that's basically been out on the internet for 11 years now. And no one has shown me they're actually trading it because I know they get screwed up once they hit a loss. They're like, this stuff doesn't work. Okay, next question. Which session do you trade the most? I told you London. London is the best. Disparity, we talked a little bit about that. These are great questions. I wish I could answer them all, but there's just a massive amount of them. What is your average reward risk ratio? That's an excellent question. I like 1.5 to 1. It really depends. But again, your reward risk ratio is going to come at you when you start to look at any type of repeating structure of your trade. You're going to get wins, you're going to get scratches, and you're going to get losses, and you're going to get this win rate. And you might get 66% for a 2 to 1. But then you bring it back to 1.5, and this jumps up to like 73 or 74% win rate, right? Your effective win rate goes even higher. So really, that depends on you. I think it also depends on the time frame you're trading, right? So for the 15-minute, I'd be looking more for a 1 to 1, maybe 1.5 to 1. You go down on the M1s, we'll show you tomorrow a lot of 4 to 1s. So it really depends, again, on your entry techniques and how you do that. But anywhere, I mean, we have some trades that pop off. I know that our H150 bounce is a 1 to 1. And that's a great bounce. I mean, this trade is fantastic. I don't have it. It's not my area. That's why I don't put it in this database. But I do have it for past years, maybe not in GU. It might not even be in this. Yeah, I've got one in there. But that's Cars World. So that's a 1 to 1. So again, it really depends on how you want to handle things. Was Steve taught the moving averages and TDI? Pretty sure he taught himself all that. Like all of us, basically we become exposed to something and we see it work and we see it work. And I know Steve does as much homework as any of us have. I wish I could find the photograph of him with a stack of printouts on the zone retest when he first got his nips into those. He showed a stack of printouts of those. So basically, once you understand how this game really goes, you will take any tool that's given to you and you eventually want to turn it into this. How many times does it win? How many times does it lose? And what can I expect the series of losses to be? What can I expect the series of wins to be? And you test it out way before you put live money on there. So I know that he's already done that with the TDI and the moving averages. And Carr's basically taken the moving. If you love moving averages, you want to see Carr's presentation on Thursday. He's an absolute genius with those. And again, our systems are not what they were 2 years ago. All of them evolved. Carr's things evolved, Steve's evolved, I've evolved. None of them are the same as they were 2 years ago. I know a lot of successful traders that say New York is easier session to trade. That's good news. I think it might be because you're awake in New York. I mean, for me, that was the case. I would try London, but I get smoked because I was asleep. What would you identify the stop hunt box? What would you identify stop hunt box trades as? I'm a 5 to 5 on them, and they are my bread and butter. Patterns present, week in, week out. And someone made custom indicator block order based on concepts up to 6%. My prop firm challenge is in 6 days. Well, good luck to you, Andrew, on your prop firm challenge. Yeah, again, it's one of those things where I can identify my trade setup based on what I like, but it might not match yours, in which case my answer won't be relevant because I have a slightly different approach, right? So I like to get out of my trades on the first run. I don't like to hold for the pullback and the run higher. This pullback, the only reason to hold was this Asia midline. And I know that price tends to get to day open price. So it's very rare that my setup will mirror yours. So that's a really tough one to answer, but I'm psyched about your progress with that. What is my signature trade setup? That. And it used to be a bunch of complex stuff. I'm going to show you a couple more tomorrow. I have a few of them. What am I going to show you tomorrow? The H1, the M1 Chapters. I love those. So I'm going to show you guys tomorrow the M1 Chapter 00, M1 Chapter 50. No, I'm not going to show you the Mayo and the yesterday's low, yesterday's high, but I like these on the M1. I like the New York reversals. I love the tea time trades. We didn't talk about that tonight. We probably won't talk about it, but it's a New York trade that we offer that, again, was my bread and butter when I first started. And it'll never happen in London, so that's actually a typo. Let's go to all sessions. So in 2023, good Lord, that can't be the case. Let me go here. Let me go into T. How many times did tea time trades set up this year? Magic 8 Ball. And there are a lot of people doing that with trading. Believe it or not, I've seen a robot expert advisor for astrology. Like literally it says when Saturn starts to move and Mercury moves, it's a freaking EA. Anyway, so 24 of those this year. They're a rare. It's a more rare. I have to say that I'm guilty of not marking up every single one of those since I'm mostly a London trader now. But if I were to take in the entirety of our database, we do have 370 tea time trades that have popped off. So there are a number of signature trades in our group. Me personally, I don't think I would ever probably gravitate towards just one ultimately. When you're studying, when you're developing a win rate, you are gravitating towards one. There's a whole lot of information in terms of the algo that I can't possibly convey to you here. That is the discipline you need. You need to start with a signature trade on one pair, on one time frame, and build it out into multiple pairs. So yeah, if you are of the type that wants to get busy and get working, join us. It's my biggest dream to join. I hope you can. I'm working hard as I can to arrive. Good. You are my heroes, not only traders. Awesome, Jason. But officially become a student and a part of the family. I hope to be. Okay, well, again, let me go back to that screen if you're interested. Again, we are traders first and presenters second, so we're not slick, all that stuff. So there it is. And yeah, but that's a great thing. I hope you do. Thanks for your time tonight. You're very welcome, Andrew. So it looks like I've gotten to a bunch of your signature trade questions. What time do you start looking for your setups? I like to get on basically, and this is the way that I do my drills. So what are my drills and what kind of drilling would you expect if you joined our group? Well, you'd have access to this little fella here. And so let's go have some fun for a moment here. I'm going to show you the drill, just very basic, and I'll show you how I do it. So type 1 London pattern. I'm going to go down into this past week. So I'm only going into last week. I'm going to grab any one of these. Doesn't matter which one. Okay, so it jumps into it. So again, I like to be ready before it pops off. There's 201. You can see it drop. So you got an M1 that didn't translate. But again, I'm just doing a rough example. So I want to start to come on basically at that 1 a.m. and be ready. This one happened early. There was also another one that went the other direction too. So that might not have been the best one. Which one was the one that this UJ was really, really quite tasty last week? That was off the Mayo down here. So that particular trade was nice. But so I would base it on this type of approach. So I do my check down, start my check down around 1 a.m. That gives me an hour inside here to wait for action. And then Frankfurt opens a lot of times. That's 2 a.m. And then we get 3 a.m. and 3 a.m. is where the setups are. And this one worked out quite nicely in line with the D1 trend that was heading long. So I like to build my drilling basically at the back edge of this box here. So I might have all my stuff ready, but I like to come on somewhere between here and here. Great questions. Excellent questions. So I know the trend. Okay, how do I start doing? Oh, we got that one. Okay, where is the info portal found? Okay, it's right here. Sorry about that. I know I'm talking a lot, but we're going to get together tomorrow night. I hope you can join me. Again, my own approach to this is trying to get you to write your own script in life, which among many things is learning a skill set of something that can make you the money to do that. But there's a lot more that goes into learning to be a trader that could pull profits out of the market on a regular basis. there's a health component to it that I'm really into, and I've dug my beak deep into that. So I consider myself a biohacker for sure. If I'm staying up in the middle of the night on end for a decade at this point and I'm not sick and I'm super healthy, there's a reason for that, right? A lot of people that stay up in the middle of the night, they get sick. So I like to bring all this additional stuff in that probably isn't around in the trading world all that much, but I want to show you an example of a student that grabbed onto something that we showed him, and that's also really exciting to do. So I need you to sort of look at this as a journey into writing your own script of life that's going to have you hitting a lot of areas that are separate disciplines you normally see from trading and put them all together so you can write your script. And writing your script in life is really, it's not about what the other people are doing. It's about what you do. And so all this stuff boils down to this relationship you have between the charts. Not about what someone says, not about, because someone can do really well in this business, but they're taking a signature trade that you can't take because it's a time of day that you're not able to trade. And so my main consideration that I get from people a lot is, when can I make this a full-time thing from my day job? I kind of looked at it the other way. When I first got involved, I made sure to do better at my day job because I knew there were going to be certain nights of the week I'd stay up in the middle of the night and get like 4 hours of sleep. And so I need you to anchor your day job in a big way. Make whatever you can do to solidify your day job. Really do your best with your day job. Don't jump off of it right away, because you're going to need that buffer of capital that the day job provides to get you proficient in trading. And so all this stuff mixes into this. Write your own script, but don't do it abruptly. Try not to be, again, where's my little picture of this guy? I got another one for you too. On top of that, you got that guy. And then when it comes to this question, a lot of times we have that guy. So be careful with these two. You'll end up making changes too quickly that you don't want to make. And that's one thing that we try to counsel against. We like to have at least 6 months of operating capital to do full-time trading, to completely not have a day job. But generally speaking, you're going to have considerations like your day job. How do I fit my trade style in with my day job? And if you look at other people's success, you're looking at the time of day they're trading, and it might not be the time of day you trade. And so you need to tune yourself to your time of day, to your specifics in life, and don't be the chimp that sticks the fork in the light socket, right? Okay, Mohammed, what's up, brother? Good to see you. Steve is on Wednesday. So let me get that thing up. So here we are. We're at the end here. I want to wish everybody excellent trading tonight. But this is our structure going forward. So I'm going to go tomorrow night at 7 p.m. Steve will come on Wednesday at 7 p.m. I'm not sure how Carr is going to do his pre-markets, if they're going to be videos or if he's going to actually do it physically. Sorry about that. We'll hopefully get a little update from Steve on that on Wednesday, or maybe BTMM support wants to send out a itinerary or such. Maybe you guys already have it. I don't know. And then Thursday, Carr comes on. So Steve is Wednesday. All right. And then Carr does this. He did one of these on Sunday. I think that was just for our members, but these are great where Carr goes over everything on Sunday. So you can see we got a lot of stuff for you guys. If you want to join us, it'd be great. If not, hey man, I'm here tomorrow night to teach you how this market is manipulated from a fundamental standpoint. So you will always remember how the manipulation works. And so when you throw on CNBC or ABC and all that stuff lines up with the chart, you'll be able to say, okay, that's what Jim taught me. So I don't want to be like the rest of the herd and get stuck there. I want to go the other direction. So tomorrow night, join me, 7 p.m. Eastern. I'm going to give you guys, I guess it's a bird's eye view, but I want to show you the manipulation so it's really simple. If you're looking at any complex task, let's use the example of military conflict. God forbid anybody has to go through that at this point. I hope you don't. But if you ever did or you do, there's going to be a singular focus of mind that's difficult to describe for someone who hasn't been there. And in order to have that singular focus, you need to study super clear ideas over and over and over again so your responses are near automatic. So when something happens that you've trained for, you instantly do this particular type of thing. And that's exactly what we're talking about when it comes to training yourself into this idea of being automatic with this stuff. And a lot of people, unfortunately, don't do that. They get into a rut and they change their approach and they do something a little different and they move stuff around. But when you get into that mindset and you don't leave that mindset, you're stuck in something that's difficult to describe. So that really is, I think, the trader's ultimate disposition is kind of almost like you're in military combat and you've trained enough and you've made things that are complex really simple in your mind. So as I'm looking at the market and I'm determining, is it manipulated right now? I know that it's not manipulated all the time, because you're not going to manipulate a $7.5 trillion market all the time. You're just not going to do that. There's certain areas where the market is going to be manipulated, and there's certain areas where it's not. So can I get a simple thought picture of the manipulation that's so brutally clear that even though bombs are blowing up next to me and buddies are dying and the smell is bad and everything is going to hell, I still can anchor back to that one fundamental idea? That's what I want to try to show you guys tomorrow night. So I want to thank you for joining us tonight. It's been an absolute pleasure meeting all of you. And I could do this stuff for a long time, but I don't want to get in the way of everybody's life. And I want to thank Steve and Heidi for deciding to bring this stuff forward to begin with. Without those two, this wouldn't be here. And we'll see you guys tomorrow night, 7 p.m. Eastern Standard Time. We'll go for about an hour, maybe blow right through it. I'm not sure, but I also do a pre-market at 8:30 tomorrow as well. For those of you all that are in the group, I will have the templates posted and the daily trade organizer posted within about 5 minutes in our forum. And the video will follow soon after as it's rendered. God bless everybody. Big hugs to you. Wish you massive success if you join us, or if you don't, that's all right. We love you all. Have a great night, everybody. We'll see you tomorrow at 7 p.m. Eastern. Ciao for now.